Rise. Coming up this morning in business, Bank of Ghana slashes currency issuance costs by over 50% in 2025 as printing expenses surge and cash in circulation climbs to 83.8 billion cedis. And also, Institute of Economic Research and Public Policy questions International Monetary Fund oversight and institutional accountability amid Bank of Ghana's 2025 loss.
Supported stabilization programs typically result in significant central bank losses? If so, under what conditions?
And much later, European Union ambassador hails Ghana's economic recovery surges and urges long-term discipline. I am Christabel Success Trevor. We'll bring you details of our headlines and other stories shortly. Please stay with us.
3FM 92.7.
The Bank of Ghana recorded a sharp drop in the cost of issuing currency in 2025, driven largely by a steep decline in printing and minting expenses. This comes despite a notable increase in the total amount of cash circulating within the economy over the same period. There's more in the following 3 Business News Desk reports.
The Bank of Ghana's 2025 financial statement shows a sharp decline in the overall cost of currency issuance, which fell from over 1 billion cedis in 2024 to 471 million cedis in 2025. The drop was largely driven by a substantial reduction in printing and minting expenses. Costs associated with producing new banknotes and coins declined from 986 million cedis in 2024 to 277 million cedis in 2025. However, the report highlights rising pressures in other areas. Agency fees increased to 10.6 million cedis, while other currency-related expenses surged significantly from 14.6 million cedis to 183 million cedis over the same period. Spending on the importation of foreign currency also recorded a marginal increase, rising from 14.4 million cedis in 2024 to 16.5 million cedis in 2025. Despite the reduction in issuance costs, currency in circulation grew from 71.6 billion cedis in 2024 to 83.8 billion cedis in 2025, reflecting sustained demand for cash within the economy. The central bank explains that currency in circulation represents the total value of banknotes and coins held by public and financial institutions recorded at face value.
3FM
it adds that
92.7.
the liability associated with issued currency is calculated as the net position after deducting notes and coins held by the bank itself.
Meanwhile, the Bank of Ghana, BOG, has announced a significant intervention in the foreign exchange market, pledging an additional $350 million to address a persistent buildup in forex demand and market volatility. This move aims to cover residual unmet bids from recent auctions and stabilize the city, which has faced renewed pressure from the energy manufacturing and mining sectors. The BOG has been selling an average of $110 million per auction to commercial banks since the start of 2026. In April 2026 alone, the central bank injected approximately $1.35 billion into the market through its intermediation program. Despite these efforts, the cedi depreciated by 1.56% in April, bringing the total year-to-date depreciation to 5.80% against the dollar. Executive Director of the Institute of Economic Research and Public Policy, Professor Isaac Boadi, has raised a challenge to both the Bank of Ghana and the International Monetary Fund, questioning whether the global lender is complicit in the central bank's 2025 financial losses. Specifically, he is demanding a transparent audit of the policy choices made under the IMF's watch to determine if these staggering deficits were a preventable consequence of the current stabilization program.
The BOG's recently released 2025 financial statement revealed an operating loss of 34.9 billion cedis, inclusive of other comprehensive income, from the 9.49 billion cedis loss recorded in 2024. Professor Boadi is challenging the central bank's narrative that these losses are simply the cost of maintaining economic stability. He expressed particular concern over what he termed a shift from denial to justification. With Ghana currently under a $3 billion IMF-supported program, Professor Boadi is demanding clarity on the fund's level of oversight. He questioned whether the IMF merely observed these losses, endorsed the policy choices that led to them, or raised private concerns that were never shared with the Ghanaian public. The Institute of Economic Research and Public Policy posed 4 critical questions to the authorities.
Do IMF supported stabilization programs typically result in significant central bank losses? If so, under what conditions are such losses considered acceptable? What specific factors led to Ghana's 2025 losses, particularly in a year without a major crisis such as COVID-19 or the banking sector cleanup? What accountability mechanism exists when central bank policy decisions result in substantial financial losses?
The think tank noted that without clear, honest answers, the very economic stability government seeks to defend could become unsustainable.
In the coming days, a letter will be forwarded to IMF, and in the interest of oversight and accountability, which will naturally rise, we think it's important that IMF also have a closer look to our books, because we think that as a think tank, we try to shape and help administration.
You heard the voice of Executive Director of the Institute of Economic Research and Public Policy, Professor Isaac Boadi, in that report. The European Union, EU, has lauded Ghana's economic rebound as positively surprising, though it warns that the nation must maintain strict policy discipline to ensure the recovery is durable. Speaking at a press briefing to launch Europe Month, EU Ambassador to Ghana noted that while macroeconomic indicators are trending upward, the sustainability of these gains depends on continued structural reforms. There is more in this report.
Ambassador Skinebach highlighted that Ghana's current success is tied to a combination of internal reforms and favorable external conditions, including high global gold prices and ongoing debt restructuring efforts. However, he cautioned that these external factors are volatile. The EU ambassador also addressed the EU's recent abstention from a United Nations vote regarding slavery as a historical injustice. He clarified that the move was not a denial of the legacy of slavery, emphasizing that the EU and its member states continue to acknowledge its historical impact. He pointed to active restitution efforts, such as the return of cultural artifacts, as evidence of this commitment. On the front of development cooperation, the EU is pivoting its strategy to address regional imbalances within Ghana. Approximately 60% of EU-funded development programs are now concentrated in Ghana's northern regions. This concentration aims to reduce socio-economic vulnerability and prevent the spillover of instability from neighboring countries.
We'll now take a look at how the cedi is faring against major trading currencies and how some of key commodities are also faring on the global market.
On the interbank foreign exchange market, the dollar is selling at 11 cedis 24 pesewas. It's gained 1 pesewa. The British pound is selling at 15 cedis 26 pesewas. It's gained 8 pesewas. The euro is selling at 13 cedis 17 pesewas. It's also gained 5 pesewas. However, be guided that these figures could be higher at the Forex Bureau near you. On the global commodities market, Brent crude is trading at $110.15 per barrel. Gold is trading at $4,556.87 per ounce, up by $34.96. Cocoa is trading at $4,074 per ton, up by $191.
That was an update from the Forex and Commodity Market, ending the business news on Sunrise. For more business stories, kindly check out our website, 3news.com. My name is Christabel Success Treve. The rest of the Sunrise team are up next.